Well. Good evening, or good morning, or good afternoon, all of you. It's Joseph here again, live from Hamilton, Canada. I hope all of you are doing well. Today is March 7, 2026. It's about 9:06 p.m. Eastern Time here in Canada. I hope all of you are doing well. So, yes, I'm back. I will say that I was off for almost 6 weeks there, trying to recover from my trip, but it was a month-long trip back in Asia, in Manila, Philippines, of course, with the family, and had such a great time and great memories. Yeah, I'm back now. That took me 2 weeks to recover, I think. But yeah, I think it just takes. I guess it just takes a little time to recover. Um, today's topic, I just want to talk about. I mean, taxation year is upon us here in Canada. It's typically April timeframe. Every April, we have to submit our taxes, and I just thought that I'd come on here quickly, just to answer a few questions that I see a lot of people have been asking, and some people have texted me. Some people have invited me to a, uh, a live session, like a podcast to talk about taxation, business, that is business taxation. So I am going to be one of the guests. I think it's next week, March. I believe it's March 13 next week. So yeah, I'll be talking to my fellow business partners who like to know more about business taxation here in Canada. So the first thing I wanted to share with you. Oh, sorry. By the way, before I forget, it's Joseph here from Hamilton, Canada. I am a retired IT professional from the banking industry. I am a husband, married to a wife. I have two young adults. I am a financial advocate or financial coach, self-taught in financial planning, retirement planning. At the same time, a very active stock market and real estate investor. I am a very proud digital business owner. So this is actually my next chapter in life, which I'm truly, truly enjoying. In this business, we help individuals or parents to earn money online with our proven business model. So yeah, it's a worldwide business, and we are in multiple continents with 277,000 business owners as we speak. So yeah, so let me just show the first question. The first question that I've been asked and some comments that I've received is, how do I determine my business accounting or reporting period, right? So a lot of people don't know about their accounting or reporting period. So typically we have what we call a calendar year, right? A calendar year is typically from January to December, right? That is your calendar year. And typically some people use it for their business reporting or accounting reporting, but typically the more accurate way is when you start your digital business or your brick and mortar business. So let's say you launched it or you opened it, or whether it's your restaurant or whatever, you open it, let's say, June 1st, right? June 1st. So you open it June 1st, that's the start of your operating period. So June 1st, let's say 2026, is the start of your business operating period, right? June 1st. Now, for you to actually report your last sort of reporting period, to determine your last reporting period, it would be May 31st, right? So it would be your starting point would be June 1st, 2026, right? And then your ending would be in May 31st, 2027. So you would then use that reporting period, accounting period, when you report your taxes. Okay. So obviously, if you started June 1st, 2026, you don't do your taxes until, in Canada, April okay, April of 2027, right? So you got to make sure that you know that reporting period, because that cannot change. It's also called this fiscal period, right? Fiscal period for businesses. That's what it's called. So yeah, so it's very, very easy to determine, as long as you open and you launch your business at a certain date, count 12 months, right? Then that would be your ending date, whatever that month or day would end. Okay. So that is sort of how you determine your business accounting. But that's very easy to determine. But a lot of people have been using calendar year. I don't know how they do that, but to make lives easier, I mean, they do use January to December calendar year. I would not suggest it that way, but anyway, some people do it. So the next question that I've been asked before is, so this is very important. Do I need to incorporate my business? So this is very, very important. I actually made some note on the side here so I don't forget. So typically, and this is for Canada, right? Typically, you don't want to incorporate your business until you're earning $60,000 to $100,000 a year. Okay, you typically don't want. I mean, that's your annual net income. That's an annual net income. If you exceed that, then you should start incorporating your business. Okay, so that's typically the what do you call it? What do you call it? The principal, right? The principal is like 60. If you're earning about $60,000 to $100,000 a year net income, annual net income, you should start incorporating your business. But there's also pros and cons to that, right? So now, the other one is when you incorporate your business, right? When you incorporate your business, it is generally advisable that your business earns more than your personal needs. So if it's earning more than your personal expenses, So if your business is earning more than your personal expenses, then it's a good time to incorporate your business. Okay, because you can reinvest your profits, right, and you can protect your personal assets. So the second thing that's really good about incorporating business is liability, right? Liability protection for anything that you get sued for in your business. Then it protects your personal assets, right? It's totally different. Your business becomes a separate entity, right? A separate entity, and that it's not mixed in with your personal assets, right? Which is a good thing. Okay, so it gives you that liability protection. Now there are tax benefits into the incorporating a business. The taxes in incorporation of a business is a much lower, and you actually pay a flatter rate on the incorporated business versus a sole proprietorship, which is your name, your business is under your name, your personal name. There's what do you call this? There is a you would get tax on the personal or marginal rate. So it's like the same as what we file for our personal taxes. You'd fall under that same tax bracket, right? Which is higher marginal tax rate. So I mean that's a big plus for incorporating your business, right? Now the thing is for my audience and viewers, and a lot of people have asked this question. Once you incorporate your business, you should hire an accountant, because it gets very, very complex. Filing for incorporation, your taxes, is complex, so you need professional help. So I would not incorporate your business if you don't want to hire an accountant. Try to stick to your sole proprietorship if you can, if you're going to file it your own, right? So that's the risk. Incorporating it, you don't want to file yourself, because you can get into big big trouble with CRA, Canada Revenue Agency. That's same thing as same equivalent as IRS in United States. The other thing that I will say in terms of incorporating your business is it's more expensive and more complex. It will require a separate filing, and separate record keeping, right? So it's very, very important that, when you take on the responsibility of incorporating your business, there's a bigger, obviously there's a bigger risk to you. But if you hire an accountant, then you know that it'll be done the right way. And one of the things that you want to make sure is you don't make huge changes. So this is one of those things that flags CRA and IRS, right? When things when your claim or when you do something that is out of the ordinary in your filing, that is a flag and it triggers an audit, right? So one of those things that you want to make sure is always that if you are filing it for your taxes yourself, make sure that there's not a lot of big changes to it, because it will get flagged if you start making changes and suddenly something new, right? I'm not saying new in terms of expense category. I'm just saying something new that is drastic, that it requires attention, right? From the CRA or IRS audits, right? So you want to stay away from that. So that's why it's so important to hire an accountant, especially if you're incorporating your business, because he or she will be consistent in terms of what to file and what to claim. Okay, so it's very, very important, and by all means, this is something that you should not take lightly, because it could mean that you can get audited. And again, you just want to make sure that you have the proper way of record keeping and all that stuff. Your receipts, your claim, your notes, your whatever it is. You just have to make sure that you have a very, very good record keeping. It's called bookkeeping in a way, right? So yeah, so hopefully I explained the incorporation of a business. And again, there's pros and cons, but to me, once you earn that, once your annual net income reaches about $60,000 to $100,000 a year, then maybe you should start incorporating, because it gives you the liability protection. Okay, that's the most important one. And then my last question, again, this is going to be a short video, and I just wanted to answer some of these questions for my followers and my guest. And this question is always a well-known question. Okay, what expenses can I write off against my business? So if you are filing your taxes your own, and make sure that you're very, very consistent in your expense categories, right? So a good example of those are, advertising cost, right? Your travel cost, your what else? Marketing or advertising, office supplies, right? Whatever. What else are there? License renewal, right? Advertising, I've already mentioned, and anything that actually pertains to your business. So here's one rule of thumb. Okay, a lot of people forget this. Any expenses that you have incurred in running and operating your business, you can write off. Okay, so any expenses, costs that you have incurred in running and operating your business, you can claim that as a write-off. Okay, you can claim it. So the other thing that is aside from that is obviously your home office, right? So a home office, a lot of people ask, so can I write off my home office? Yes, you can. Yes, you can. You just have to make sure that you indeed give the right or calculate the right dimension and the right ratio in terms of how much you can claim. So here, I can say, I may have, 10 by 10, let's just say. I just picked a number, 10 by 10, 10 feet by 10 feet, which is 100 square feet, right, that I can claim towards my business. Now, a lot of people ask, well, how do you calculate that ratio? Well, the ratio is that, when you have, like, let's say, in my case, 100 square feet that I'm using as my home office, and then let's say I have a 2,000 square feet of home total living space. Well, I can claim like 200, right? Somewhat, right, kind of thing, on my taxes, right? So that's the ratio. It's like 200. You can even say 100% or no, 20% or 30%, whatever it is, right? Whatever that ratio is. Then you would just take your utilities, right? So let's say the total annual utilities, okay? Like, let's say your heating is 1,000 for the year. I'm just picking up a number, and then your gas is 500, whatever. So that's $1,500 for the whole year again. So your gas, your heating, electricity, whatever, right? 1,500, and then you multiply it with that ratio of the space that you're using as an office, and that's it. That's what you will claim for the year, right? The key is to make sure that you have your annual expenses of your utilities. That's your heating, that's your electricity, combined, and then you just multiply it based on the ratio of the space of your home that you're using as a home office. That's it. That's all it is. And then you can claim that. So again, when you're claiming for advertising, when you're claiming for marketing, when you're claiming for mileage and stuff like that, make sure that it is definitely used for your business. You cannot claim personal stuff in your tax filing, right? You cannot. It's not allowed. It's actually illegal. It's you can get flagged as a fraudulent claim, right? So you want to stay away from that, because once those things fluctuate, especially when you're filing on your own, when those things fluctuate, the claims, okay? Let's say, 1 year you're claiming, $500 for your home office. Let's just say $500 for your home office, and then next year it becomes like 2,000. You gotta be careful with that. You gotta figure, or CRA is going to figure, why is this person claiming 500 from 1 year and now it's 2,000 the other year, and this is only for your home office, right? So you got to make sure that you're very consistent in your filing and your claim. Okay, so that's very important, because that's a key for being flagged with CRA or IRS. So yeah, so those are sort of the three questions that I always get asked, and it's very, very easy to determine the expense categories and the calculations for whatever you can claim, and it's not difficult to figure that out. So yes, you can file your taxes on your own, especially if you're not incorporated. File it on your own and make sure you stay consistent. Now, I always recommend to hire an accountant, even though it's not your business is not incorporated. Because why? Because accountants also has ways to maybe able to claim other things that are legitimate, that you are not claiming yourself, that you're forgetting, right? So your accountant, when you hire an accountant, they become your professional advisor, right? They become professional advisor to you. They're going to be advising you as to what to do and what not to do. And if you get audited, then your accountant will have to deal with the CRA themselves, right? And they're very good. The accountants they're accredited, right? And they have a license, and they know what to do and what not to do. So why not hire? And whatever you pay your accountant. So let's say you pay them $100 for doing your taxes, or let's say $300. It's worth the money because it's tax write-off for you as well, because you paid that accountant for his or her professional services for your business. So you can write that off as well, right? The $300 that you paid for the following year, of course, right? So, a lot of people, I would say, and this is one of the reasons why I got the guts to sort of come on here on social media, is really to teach and to educate people on these things, because some of these information are hard to find, and some of them can be costly because you have to seek professional advice. Well, no, that's not my intent. My intent is really to provide as much information, legitimate information, to my viewers and followers, and you guys can have these discussions. You can say smart discussions with the professionals, so that you can challenge them, because not all professionals know these things as well, right? Sometimes sometimes you have to challenge them and put them on their toes, right? So it's very, very important that we all learn these things. It's very, very important that we learn these new skills, right? Educate ourselves so that we can have more meaningful conversation with these professionals, right? And the same thing goes with your financial planning, your retirement planning. And folks, again, I'm doing this. I'm not here to make money out of this. I'm here to just educate and inspire people that are following me and people that are interested in this topic. Because who isn't not interested in terms of retirement planning and financial planning? I don't know of anyone that's not interested. And I know people may be interested, but they get discouraged because they get lost. They get overwhelmed, right? With all these lingos and terms and whatever. It's not difficult. It's not difficult to understand. It's not difficult to learn. It's just a matter of explaining to you in your language or in your terms, right? Folks, this is so important now these days, especially with the economy, with the things that are happening with inflation, so high, cost of living so high. We need to do this for ourselves, for our family, because it's so important that we all need to be frugal, and we need all to be saving for our future. So anyway, that's really my my podcast for tonight. I wanted to thank all of you for watching this live or on the replay. Again, if you have any questions in regards to financial planning, retirement planning, tax filing, whatever, I'm here to answer some of the questions and to clarify them for you, so that you can have a better understanding and you can have better, again, discussion with your professionals or advisors. Anyway, until my next episode, may God bless you all. Bye for now.